Can I just get into this? What happens next? The company's telling us we're not going to get details of subscriber numbers. Is that the right course of action, or are they just trying to take away a key data point here when it's going to be tricky to grow subscribers?
Sure. Good morning, Karen. I think I'm actually really pleased that they are moving away from that particular metric, which I think is overly obsessed by the street, because actually they've only met the number on that guidance once in the last 24 quarters. So moving that away and looking at profitability and revenues and cash flow are all good things. So I think we can stop obsessing about that net subscriber number. The important thing now is to drive the business into the next phase of growth for the business, and that's essential, I think, for looking at this business in a very more mature way in terms of the business now. It's no longer about the first mover advantage or about scaling ahead of competition, because that past, that's now in the past.
2 points then on the future and revenue, Neil, because the company has 2 new features here, one being the ad-supported model, so we're serving up ads to customers who pay a cheaper amount for their subscription, and the other point being cracking down on password sharing. How does it manage to proceed with this ad-supported model when we've got cyclical headwinds now, and on the other side, not annoying subscribers where they turn off their entire account because family members can't access the account?
Yeah, well, I think to a degree, on the first point, they talk about being pro-consumer, and it's really a kind of widening the appeal of the service to more users. There's a very interesting dynamic at play here, in that actually they are obviously trying to capture an additional part of the market at the lower end, whereas Disney are actually, what they're doing is raising their pricing by 30%. If you look at what their plans do in December, so they're now going for a method of thinking that their content is good enough to charge more for the basic service, whereas Netflix are trying to capture, I think, a larger moat, if you like, of the market. The second point, in terms of if we're looking at the password sharing, these are the kind of services that companies such as Sky, for example, in the UK, have done already, where you get a limited number of applications or apps that can access that service. I think that's a fair point to do. I think most users will admit that there has been a lot of kind of free riding, if you like, or freeloading on that content, and it's a natural thing to try and monetize that. And feedback I've had from investors is they've wanted Netflix to look to do this, to monetize their base more efficiently for a number of years.